All right, so I just wanted to go over risk management and basically explain to you how you can lose. I don't know, you could be wrong over 50% of your trades and still be profitable trading. And this is how you do it. So the industry standard is risking 2%, and that's of your total account balance on your trades. If it's a iffy setup and you're not really for sure about it, drop down to 0 to 0.5% or 1%, but 2% is industry. You can use whatever you want: 10, 20, 30, 40, 2%, 1%, 0.03%, whatever you want to use. But I'm going to show you how to create the position size, how many units or how many lots to place to achieve that risk management. So basically, if we're going for 2% risk, we're going to put our tool on the chart, see, because we're going to enter a short here, and we want to put our tool on here to see where our stop loss and take profit goes. When you look at it, you hover over here and you look at, okay, 50.3 pips is what it would be from here to here as a stop loss. So we're going to go to this website I use is myfxbook.com. I like them because they show me market hours and they give me economic news. Basically, if there's any high impact news coming up on a currency, be it unemployment rate, inflation, whatever. So you come up here and you hit FX calculators. I go to position size calculator here, and let me zoom in a little bit more so you can see it better. All right. So we're using Euro USD. That's what we're trading. Our account currency, like that's your account, your brokerage account, is in US dollars. It could be in another denomination, but our account size is going to be, say, just $5,000, and we're risking 2%, and our stop loss was 50.3 pips. We type that in, we hit calculate, and it's going to show us the results. So we're trading 2% of 5,000 is $100. So we're risking $100 on this trade. Units is 19,881. So if you're using a US based account, that's what your position size would be. Sizing is 0.2 lots if you're using a lot based account. And that's what you would want to enter. So if this trade was to play out and you were to get it stopped out, now you would only lose 2% of your account balance on your losing trades. And here we go. So we get stopped out, we lost the trade, but we're only losing 2%. Now, if you win one trade with a higher RR than the 2% or whatever, you're gonna make money, and even though you had a losing trade here. But like I said, you could lose 50% of your trades, and with your proper risk management, you're going to continue to be profitable. Anyways, that's how you do. That's how I do risk management. That's pretty much the standard. If you have any questions, just put a comment below.